The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We got NVIDIA earnings last night. They're down a bit, but off of the lows that we had, pretty much survived that, and we got the markets above where we were coming into that. So we get the S&Ps right now. Check it out, right? You drive lower into the close, you dip a little bit lower on those NVIDIA earnings, and just like that, the market claws back 65 points off those lows. We're up by 16 points right now, technically, on the session. We're trading at 56.25 right now in your S&Ps. NASDAQ 100, you see the volatility last night as well, down to all the way to 19,140. We're trading at 19,471. You get the Dow up 270 right now, and you got the Russell up by 13. So before we jump all the way around, let's get to some of the headlines. Now, we have GDP out this morning. Okay, so that out at 8:30. U.S. economy expands at a revised 3% rate on a resilient consumer. Pretty remarkable when you see this type of data, and then you compare it to the rhetoric of the Fed needing to cut 50%, 75, the economy's going to crash. We're not quite there yet, and that's why I think the Fed is going to really take their time here. They have the ammunition, they have the bullets if they need to bring it in terms of cuts in this economy. I mean, think about it, man. They are at 5.25 to 5.5%. Can you imagine what would ever happen if they had to really start cutting and got back near the zero bound? My goodness, the stimulus that would create in this economy, whether you talk about mortgages, you talk about housing prices, you talk about freeing up capital that people have in their homes, etc. Nonetheless, 3%. Is the number. You talk about it, man. Second quarter GDP growth revised from an estimate of 2.8. No, it's now 3% is that number. The first reading was 2.8. Consumer spending, 2.9%. The first reading was 2.3. Non-residential fixed investment, slightly below what they came in at, 4.6 versus 5.2. Residential, a decline of 2% versus 1.4 for investment. But quite a number. And then you got initial jobless claims, little unchanged at 231,000. So that's the number we got this morning, okay? And then you jump over to the NVIDIA numbers. NVIDIA, they beat, but they didn't beat as best as they could. They didn't beat the whisper numbers, how some put it out there. But their numbers did beat. They sure did. $32.5 billion is the forecast they have for the coming quarter, and that was above expectations. Let's see. They closed Wednesday, priced at 37 times forward earnings, quite a number. They did exceed the average analyst's estimate by $600 million for the forecast, but it was a narrow beat. Yeah, and check this out. I think this is the article has it, right? A little bit up. Where's their beat? Oh, come on. I got a few different articles. Is this the one? All right, shame on me. I'll find it. There it is. NVIDIA's string of blowout quarters. This is reported revenue versus your average estimate. And you can see that they are not beating versus what they had beaten by, as in, fiscal second quarter of 2024, you're talking about a 22% beat versus the average estimate. And fiscal first quarter 2025, you're only talking about a 5% beat in terms of topping the analyst predictions in terms of where they are. And then the Blackwell chip. 40. So this article says 40% of NVIDIA's revenue stems from these large data center operators. I was listening to the interview with Jensen Huang last night. He did the conference call last night. He jumped on Bloomberg at about 6:45 p.m. Eastern time for a 15-minute interview live with Bloomberg. And he actually said it was about 45%, I believe, in that interview when I was listening to. 45% of their revenue, but he also said that they're diversified. Now, he's out there spinning it. I don't know if having 55% of your business outside of those companies is called diversified, but that's kind of what he was saying. Listen, we have 45% of our business with the big dogs out there, Google, Meta, Amazon, Microsoft, etc. But quite a number, 45% is what it is on that. Blackwell, they were talking about, was there a problem? Well, it seems like he was representing that they fixed that problem. It was just a production. They weren't getting the yield of chips that they wanted when they were producing them at the factories. It was not a design fault. It was just a production issue that they seem to have fixed for a higher yield is what they were talking about. But yeah, third quarter revenue, 32.5. Market was looking for 31.9. But here's the key. Some analysts had that third quarter revenue as high as 37.9 billion, right? So that is quite a number. When you look at NVIDIA, we jump back over to NVIDIA this morning. And yeah, you can see clawing back some of it. We came in at earnings at 126. You drive down immediately to 115. Conference call, they didn't like what they were hearing there as well. But in the overnight session, you were back all the way to 124 at one point. Right now, we're down about $4. Now remember, the expected move was about $12 in either direction. So you're only about $4 off. Not quite there, right? If you were making the volatility play out there, not making up for the volatility when you're only getting a $4 move. And a $4 move in this equity. I mean, look at these bars. Every one of these bars is $4 or $5, right? Just even consolidating near 125 to 130. We're going to open at about 121. Okay, so you can see we were down to $90 at the beginning of this month. We're sitting at 121. That's one way to put it. And are we still going to be at 3 trillion? 2.99. Yeah, 2.99. So flirting with that 3 trillion mark, trading at 121.53 right now for NVIDIA shares. And we'll get into that a little bit more in the program. We'll break it down. We'll see how we trade on the open. But pretty strong earnings. The market liking it. Seems like Blackwell is going to take in billions of dollars in the fourth quarter this year, but he wouldn't be exact. And that was the one thing that kind of got him, I think, on that earnings call. If you back things up to a minute, and you take a look at the earnings call, that earnings call beginning at about 5 o'clock, and you can see it was a slow, steady decline from about 121 to 115 by the time he got off that conference call. And a lot of that having to do with that analysts were looking for a little bit more information in terms of when those Blackwell dollars would start to come and how many billions it would actually be. Let's see where that was. Yeah, they talk about Blackwell. Here we go. During the post-results conference call, analysts sought more details on the amount of revenue that the new Blackwell chips would deliver and when. All that they would say was that it would be billions of dollars in the fourth quarter. Well, when your company is valued at $3 trillion, folks, billions doesn't matter. Isn't that remarkable, right? You know, you're talking about 2 billion, you're talking about 3 billion, are you talking about 10 billion, right? Are you talking about 15? Where are you? Yeah. And of course, you got some touting of the industry out there. Trillions of dollars of equipment will be needed to replace outmoded gear in the world's data centers. Probably correct. That replacement process is just beginning. AI is taking over computer search, helping companies speed up their business process, and needed by countries to secure data. It's affecting how every layer of computing is done. Now, be aware of who the messenger is. Talk about a little bit of bias, but I think that's true. I was having a great discussion with Jacob yesterday, and we were just talking about the different facets of anticipating what was going to come today. And, you know, one of the things I was mentioning is, like, we are at the early rounds here. It's very difficult to imagine that companies like Meta, Google, Microsoft, Azure, right, all these companies, are they really going to slow CapEx in the next couple of years? I mean, if you're spending that kind of money, seems like the build-out is on. All right, folks, we got a lot to talk about. We'll talk some different equities. We got S&Ps up by 18. We'll be right back. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up about 20 points right now. And remember, pretty remarkable, right? So we survived NVIDIA earnings, as in, that was one of the catalysts that could be a tough problem for this market. If NVIDIA had some real disappointing news, you better believe, with the weighting, with the way it's driven AI, etc. But no, we're within about 90 points of all-time highs right now, trading at 56.30 in the S&Ps, quite the resurgence. And you check it out. I mean, almost clawing back the losses we got yesterday. Just like that. Pretty remarkable. NASDAQ 100 right now, trading up 80. Dow up 289. Check out the Dow inching towards those highs as well. 41,460. And the Russell up by 0.7 as well. You jump over to crude. Crude right now up about 95 pennies, trading at 75.46. We were at almost $74 early this morning. You jump over to gold. Gold, a little volatility on those GDP numbers. Gold up by $8 on the session. We were all the way up to $25.57. You dive lower on the GDP numbers and the jobless claims at $8.30 to $25.37. And just like that, we're back to the middle of that range, you could say, at $25.47. And we jump to notes and bonds. And what do we got this morning? We got a little bit of lower price and higher yield. And it would make sense, right? On a GDP that gets revised up to 3%, we were sitting at 2.8. What does that mean? Well, that probably means the economy's doing okay. All right. Now, there could be lag. That could change. We get the jobs number a week from tomorrow, right? We're coming into the long weekend. Point being, though, we have an economy growing at 3%. the Fed might not need to cut at a rapid pace that they're anticipating. So what do you get? You get a little bit of a pullback. We have a little bit of lower price, higher yield. And when you're putting in higher yield, what's that going to do? That's going to add a little bit of dollar strength. So you get higher yield, dollar strength. And when you get the dollar strength, that's the reason why you get a little bit of a sell-off in the gold contract. Got to recognize those correlations because they are there in a big way. And yeah, we got gold sitting pretty healthy though, 25.50, all things considered. You take a look at that dollar index, and I had a great discussion with our man Teddy Cakestat yesterday. And he's saying, boy, it's been quite a run to the downside. Yes, we're getting a trade lower, but boy, you talk about, just check out this chart. Can you even see that pop here? Yes, we're getting a little bit of a reprieve, but maybe it's just a pause in the action. We'll see where we go from here. But nonetheless, we have a little bit of dollar strength. We have a little bit of higher yield. We got NVIDIA trying to claw back its losses. We're trading at 121. You're down less than $4, and it's going to be an interesting open on NVIDIA shares. As we know, when supply equals demand, we really find out where this equity wants to go on the open. And I'd say it was a pretty decent quarter. I mean, you didn't live up to expectations, okay? That's always going to be the case when you get a stock like this that can just beat to dramatic fashions, all right? But yeah, that's what we're talking about there. Yeah, they're talking about valuations on this one. I was reading so many of these articles this morning trying to check out every single take I could, and they got plenty of them, as you'd expect. But yeah, $32.5 billion. The market was looking for 31.9. It was a little bit of the vagueness was, I think, what gave the market some pause. And that's what they were talking about on the Bloomberg interview as well. And, like I had mentioned, when you're just talking about billions, that is a vague term in terms of where Blackwell's going to come in. The one thing they did say, though, I recall, is that they have more demand than supply right now. And if there are more demand and supply, that's a problem that you love to have because they're going to catch up to it. They're going to ramp that up. $50 billion in buybacks. You got to like that. The market came out with. Excuse me. And yeah, revenue growth just through the roof in a big way. All right, what else we got going on out here? I was reading an article early this morning, like 6 in the morning. I was up. 6 in the morning. I was up this morning, and I couldn't find the exact article, and I'll find it because I wasn't reading it on this news site, but it was talking about the wave of CDs and the maturities that are coming down the line right now, and it is remarkable. So this article was written, it's coming in like a month. This one was written 3 months ago, and it's talking about there's almost $1 trillion in maturing CDs for people who are buying 12-month CDs, and what are they going to do with that money? It's another side of this argument when you talk about the market selling off. There is so much cash on the sidelines right now, right? If you ever have the Fed coming in to stimulate, let's just say the Fed is late to the party, the economy is weakening, there's lag that's going to kick in, consumers are going to feel it, they're feeling the strain from inflation, they're going to start saving more, they're not going to spend in the economy. There is so much money on the sidelines right now that if you ever drop rates to zero and all the money that's in CDs, what's it going to do? Well, that's the reason why you do that, right? You put it into work. You don't let it just sit there. It is remarkable, though, when you look at it in terms of where they are. In the next year, now I think this was written a few months ago, okay? But in the next year, $2.5 trillion in bank CDs. Remarkable. Now, what I would advise folks, okay, is that if you are in this market, that's why I'd always pull up what I was looking at during that time. If you wanted to be in that CD market, one of the problems is your reinvestment risk, right? As they're stating, what happens when those CDs expire and you got to go out again and reinvest them? Well, if the Fed's dropping rates dramatically, that's going to be a problem. What you can do is you can go out for like a 5-year ladder if you want to, right? That way you're pushing things out. You get to roll them every year and catch up, because people are going to have a reinvestment problem right now, and what are they going to do? But it is remarkable that in the coming months, you got $950 billion in bank CDs that are going to come to term, and then when you stretch it out over a year, $2.5 trillion. I'm surprised people didn't push things out a little bit further than that. But you know what? You don't want to tie up that money for longer than you may think that you can afford to, in terms of you want to have that money accessible, etc. But yes, that is quite a number in the next year that they're going to have to figure out what to do with. And if the bank, if the FDIC, if the Fed, Federal Reserve, not the FDIC, begins cutting, then yes, they're going to have some real decisions there in terms of where they go and where the rates go. Yeah, and you look at, the spikes there in terms of people really started paying attention. When you were in a non-interest-bearing account, you suck that money out, you put it into a CD, and it looks like they put it into a yearly CD, and what are they going to do when that money is gone, in terms of when that CD expires and they have to figure out what they want to do from there? All right, jumping around, what else we got going on? So NVIDIA was not the only one out with their earnings last night. They were definitely the main event, but we got CrowdStrike. They were out with their numbers as well, and they had some decent numbers, but conference call not going as they liked, as you traded from 275 down to almost 250. We're back, only down about $3 though from where they were, from 264 to 261. So we're going to see where they trade on the open as well coming up. And you jump over to Salesforce as they beat Salesforce, trades from 254 up to 270. Salesforce will take a little bit. Salesforce this year, they're going to open at about 270. All right, folks, we're coming back for the open. NVIDIA shares down about $4. We get to see how that equity opens. We'll talk some more equities. Don't go away. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got NVIDIA opening right at 120. So a little bit of a dip. We'll see where the market goes. You got NVIDIA right now down about 4.6%, down about $6, trading at 119.92. We'll call it. S&P's up by 15. We jump around to some of the other equities with their earnings. CrowdStrike. Yeah, they're catching a bid, man. Check that out. Now, CrowdStrike, right? We got a lot going on with CrowdStrike, man. CrowdStrike was trading at 398 a month and a half ago. You dive down to 200 on their snafu with Microsoft bringing down the global internet, but we're up by 2.4%. 2.7 make it on their numbers. You jump over to Salesforce, up by 4.7% on their numbers. On the flip side of that, Dollar General. You talk about a fall from grace, man. I mean, look at this equity, right? From 260 down to $90, man. Yeah. And you are back to where you were trading at in 2016, 8 years ago, after a run that went from, what were you trading at? From 65 to 260, back down to 90, right where you were. Yeah, right where you were in 2016. Remarkable. So Dollar General, let's pull them up here. They cut the outlook, blaming financially constrained customers. It's probably getting a little bit tough when you're in the bottom end of the income threshold, and that's what Dollar General is serving, and it seems like that's what's happening. I mean, we've heard the stories of Walmart talking about that they're bringing in higher end customers that are price conscious, etc. Right? Dollar General's got some tough goings, man. Same-store sales only going to be up 1 to 1.6%. Originally, they were looking for 2 to 2.7%. Earnings per share, $5.50 to $6.20. The market was looking for $7.55 on the high end. They're going to be way off that. Disappointing numbers in the latest quarter. Earnings per share, $1.70, below the estimate of $1.79. Yeah, and as would be expected, you got Dollar Tree falling as well. If they're off 25%, that's going to be hitting Dollar Tree as well. And Dollar General down 24% as we get the market, though, trading a little bit higher. NVIDIA, look at that. NVIDIA only down $3, and the day is young, as our man Basil Chapman says, trading at 122.48 right now for NVIDIA shares. What else we got? We got a firm out with their numbers. Buy now, pay later. Maybe not indicative of a strong economy as well, if that is what is flourishing. What's having problems? What's having problems is dollar stores. What's doing well? What's doing well is the company that says buy now, pay later. Affirm. Yeah. Let's pull them over. Better than expected results and strong guidance. I mean, pair those two together, right? Dollar General is tanking, and the company that allows you to buy things and then put it on loan, they're the ones making all the money. Revenue, $659 million. Market was only looking for $604. Per share loss of 14 cents. The market was thinking they were going to lose 51 cents. Gross merchandise volume, $7.2 billion, up 31% from a year earlier. And folks, please be careful of these. Don't do them unless you have to. We were looking at, these get put everywhere now, okay? Just to give you an idea, like we use Shopify, and we were looking at yesterday, Jacob and I, taking a look at the website, redesigning some of the web pages, and immediately Shopify, okay, adds this to your checkout. So, for instance, like a TFNN newsletter or a Tiger Dollar purchase or something, immediately we're looking at they're trying to add the shop pay, buy now, pay later. It was telling us literally for like the $500 Tiger Dollar purchase level, you could just pay $44 a month for 12 months or something like that. And I was saying to Jacob, I was like, can we take this off? I don't want people who can't afford something to have to finance that over 12 months and somehow, because that's a problem. You know what I mean? And yeah, they're exceeding revenue across the board. Affirm's new relationship with Apple, with partnerships of Amazon, Shopify are helping. Yeah, I mean, we saw it first, but this was yesterday. We were looking at it. I was saying, Jacob, we don't want that all over the website. I don't want to take people's money if they can't afford it. If you have to finance something, folks, be careful. Okay, make sure you need it, because you start financing something and adding monthly payments. But it is intriguing to see how immediately it was added without us even doing anything. Okay, it was not a selection we made. They were trying to add that feature to each product that we were putting on the website as we were looking at potentially some new web pages for the TFNN website. So you can see how quickly It's just embedded. It's not even an option. It's everywhere. And yeah, nonetheless, Affirm trading higher. And what are they up now? 24%, man. Remarkable. What is that company valued at now? $12 billion. Pretty remarkable. That was a one-way slide, but seems like they've broken out. And that's quite a beat when you talk about a 10% beat on revenue for a firm up 25%. In this market, we're taking off, baby. We're taking off. NVIDIA, they're going to claw it back? How about it? Look at that. 123.58, only down $2 right now. The expected move was $12. So, at least for right now, the play was probably selling volatility, not buying it. And maybe things to come are not going to be as volatile as they've once been. Now, what is intriguing here, okay, I was looking at this coming into the opening bell. There are upgrades everywhere on this stock with price targets. I was taking a look at this as I was getting ready. So take out just an anecdotal glimpse of some of these banks. And listen, this is not the holy grail. Okay, analysts out here telling everybody to buy NVIDIA doesn't mean it's going to go up. But in terms of getting over this earnings call, okay, the market likes these numbers. That's the bottom line, man. Morgan Stanley maintains overweight on NVIDIA, raises price target to 150, okay? West Park Capital maintains a buy, raises it to 165. I mean, I was just going down the line. It was over and over. Craig Hallam, not familiar, nonetheless. Maintains buy. Where did he just go? There he is. Come on. Raises it to 165, okay? Wells Fargo maintains overweight, raises price target to 165. We're trading at 125 right now, folks. Bank of America maintains a buy, raises the target to 165. Rosenblatt maintains a buy, raises it to 200. Just giving you a quick glimpse, okay? Yes, we're trading lower by 2%, but look at these numbers. These were decent numbers. They beat, and yeah. The future seems like it's pretty bright, all things considered, man. Now, you take a look at some of these numbers, man. Check this out. This is over at the Journal, okay? How about the data center revenue? I was talking to my mom yesterday, and I was telling her about NVIDIA, just talking about everything. And I was looking at NVIDIA, and I was just telling her how much it's risen. First of all, I mean, you're talking about a 12-bagger going back to 2022, right? But split adjusted on this, and we all know it, okay? You go back to 2016, and you're trading at under $1. In 8 years, you're talking about a 123-bagger. Now, that one we know, okay? But it is intriguing when you look at just going back to where this thing was, 2022. But it makes sense, folks, when you look at this chart, okay? Look at the data center revenue. 2021, they're doing $1 billion per quarter. They're now doing $26 billion. My goodness, I've never seen a business. I'm not sure the world has ever seen a business like that. That's 90 days. I mean, imagine running a business where you're taking in $1 billion every 90 days, and then all of a sudden, you're taking in 10, 15, 18, 22, and $26 billion. That's probably going up from there. Stay tuned, folks. We still got some stuff. We're going to take a look at some different equities.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&Ps up by 15 points right now, trading at 56.25. NASDAQ up 128. We jump around to some of the other Magnificent Seven. Apple shares up 2%. Check out that acceleration. A little bit of volatility for Apple. We're trading right now up 2%, up almost $5 at 230.87. We jump over to Amazon, up a full percentage point, trading at 172. Microsoft up 1.5% right now. The big dogs catching a bid. Check out that. Microsoft opens at 412. We're up to 417 right now for Microsoft. You jump over to Google shares. Google up a percentage point as well. We jump over to Tesla, up 3% to 211.92 right now. Excuse me. Almost getting over this cold. A little bit persistent, a little late summer cold, but nonetheless, feeling okay. Just a little bit of congestion, but I'll get over it. And yeah, can't help but check back in, man. NVIDIA sitting right at about 122 or as high as 124 on NVIDIA, down about $3.57. We check back in on Affirm, holding on to the gains, up by 21%. Dollar General down 25%. CrowdStrike out with their numbers, up by 5%. Look at that pop on the open. My goodness. What happened there? Look at that. You never know what the market's going to do until true supply and demand meet, folks. What a great example, right? Always be ready for the open. If you're trading any equity coming off on earnings, not sure how that plays out, but nonetheless, let's go over it because, boy, that's quite a move on CrowdStrike. Stronger than expected, but it reduced full-year guidance owing to incentives for customers' commitment package after a widespread July 19th outage. Yeah, I'd say so, man. Apologize to customers and partners dealing with a class action lawsuit. Yeah, Delta's suing them probably for $500, $600 million, something like that. I think they said it was going to cost them at least. But nonetheless, they beat earnings, they beat revenue, they beat as well. Revenue grew 32% year over year in the quarter, which ended July 31st. Yeah, it seems like the market's saying, you know what? This is not going to bring that equity down. And that's the cement they needed. But boy, you don't always see that type of a rip-roaring rally. Sometimes you do, though, on earnings. Never get distracted by what's happening prior to that market, right? Look at this. You got no volume on CrowdStrike coming in. 2,000, 3,000, 7,000 shares on a 5-minute basis. And then we get to find out really where people think it's going to go when you do almost 1 million shares in the first 5 minutes that it's open. And it seems like everybody was buying as you traded from 260 up to 285. CrowdStrike up by 6%. And yeah, well off the highs, but that's quite a clawback. sitting right at 279 for CrowdStrike. Salesforce, they give back some of their gains. Decent numbers for Salesforce, though. We take a look at theirs real quick. You got Salesforce numbers. Their CFO is stepping down, but nonetheless, strong numbers. They beat on earnings, 256 versus 236. They beat on revenue, 9.33 billion for the quarter versus 9.23. And I think they even raised their guidance, right? Is that what they did? Raised their full year profit outlook is how they put it. And they're going to get a successor for their CFO. Adjusted fiscal third quarter earnings, they're looking for 242 to 244, right around the number that the market had, with a revenue number that's slightly amiss on the 9.41. Yeah, decent numbers. The one thing I want to get back to for NVIDIA real briefly is talking about their margins. So what's interesting is, and I got so many NVIDIA articles pulled up. Which one is it? Not that one. Maybe it's this one. Shame on me. I should have had it ready. No, that's not it. Maybe it's going to be this one. I think it is. Nope. Well, they were talking about the margins are getting a little dicey, but it's intriguing, and I'll find it. I'll find it for the next segment. The margins they're talking about are like 75%. So yes, they're spending a lot to keep up with competition, make sure they're in the forefront. Margins taking a small hit, but you're still talking about margins at about 75%. My goodness, right? Yeah. Oh, no, here it is. Perfect. Yeah. The new products that NVIDIA is building to stay well ahead of the competition are rising significantly in complexity, weighing a bit on the company's gross margin line. Gross margin, 75.1% for the most recent quarter, down 3 points from 3 months earlier. Yeah, but well above the 65% the company has averaged over the past year. And at 75%, that's a higher gross margin than all but one of the other companies in the semiconductor index, according to the S&P. And yeah, look at that market cap of they call them the power trio. I mean, this is just nothing like it, man. NVIDIA, and this is, October of 2022, you're at 310 billion. And just like that, you're competing with the big dogs at about $3 trillion. Pretty remarkable, man. That run that they had, for sure. All right, what else we got going on over here? Yeah, there's a little bit of Disney we could talk about. What else do I got pulled up? Yeah, we'll jump around and see how we're trading. But nonetheless, the market takes it in stride, man. Can't help but try and keep your eye on NVIDIA. Trading at 123. Are we going to get positive today? You just might, man. It was decent numbers. Expectations sky high, but all things considered, you delivered. All right, we check out gold right now. Gold trading up $10 right now. We're within a stone's throw of the all-time high at $25.70. Gold consolidating almost right near that area, right? $25.47 right now. And you jump over to the 10-year. And we got the 10-year right now down about 7 ticks. Okay, that's correlating to a yield right now in the 10-year of about 3.875%, 3.875. As we come into a week from tomorrow, we get the jobs number. Now remember, tomorrow, if you're in the Northeast, man, what time are you checking out? Are you checking out today? Did we get over it? Is this the hump, right? What are you waiting for tomorrow? Get down to Cape Cod. Beat that Bourne traffic. Beat that Sagamore Bridge traffic. You probably got to leave the office by 8:45 in the morning to beat that Bourne traffic tomorrow. You head into the Hamptons, get out of there early. Point being, yeah, we're coming into Labor Day weekend, right? Probably going to see a little bit of a trail off tomorrow. We'll see where we go today. We got the long weekend. But then we come right back, and we're right into it, man. As we are in non-farm payroll week, when we get back, you get that number coming out September 6th. And then less than 3 weeks away, we get that Fed meeting, September 18th. But that's the last data point in terms of tomorrow, September 6th. What you do have tomorrow, though, that the market's going to wait for is the PCE. And that's why I said 8:45. Because we get the PCE coming out at 8:30 tomorrow. I think that one's on my economy. Here it is. Economists are looking ahead to Friday's release of the monthly PCE for July, the Fed's preferred inflation gauge. Currently projected to show, excluding food and energy, rose 2.7% from the same month a year ago. So we're going to get that number at 8:30 tomorrow. aside from any dramatic surprises, okay, and then we come into the long weekend, and then we get the jobs number for August. Now remember, this is the PCE data for July. It's about to be September, okay? That's what's remarkable here in terms of the lag that you talk about when you get PCE for July on August 30th, okay? And then we're coming into August data. We get the jobs data September 6th, an important one there as well. All right, folks, we got markets in positive territory right now, and we got NVIDIA down less than 2% at 123. Stay tuned, folks. We'll come back. You got the Russell in negative territory. One more segment. Don't go away.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Campbell Soup. So they have their numbers down a little bit lower today, off by 2.3%. And it's interesting, over in the journal here, talking about the begin to recover after the Rayo's deal. They got some great sauce, but it seems like Campbell's didn't quite capitalize on that one. Quarterly revenue, though, rising 11% for Campbell's to $2.3 billion, just shy of analyst expectations. It swung to a loss, though adjusted earnings per share beat forecast, is what they're talking about here. A loss of $3 million. Down from a profit of $169 million a year earlier. For 2025, sales to increase 9 to 11% and adjusted earnings between $312 and $322, but nonetheless, you're down by about a couple bucks. But yeah, cited a recovery in meals and beverages. That includes soups and Rayo's pasta sauces following its takeover of Sovos brands, as well as dry pasta and frozen meals for Campbell's. Is Best Buy out too? Look at that. Best Buy's out too, man. We got earnings everywhere. Best Buy up 12%. We got a plethora of earnings. Look at that pop, man. So Best Buy gains after sales beat forecast and retailer raises the outlook. Not bad. Sales declined to $9.29 billion, down from $9.58, but slightly ahead of expectations. Profit $291 million from $274. Best Buy hanging in there, man, up by 12%. We check in as we wrap up the program. NVIDIA, they gonna make it? They might make it today, folks. They're only down 1.8% right now. Pretty remarkable. We got the NASDAQ 100 up 220. I mean, check this out, right? You got NVIDIA down 1.6%. But check out the other equities. Apple, we're $6 away from all-time highs, up 2.1%. Amazon shares up 1.5%. Microsoft up 2.5%. Look at this. Microsoft on the open. Check it out. Look at this thing. Microsoft's up $10 from where it opened. Watch out for this market, man. I think the market's we might get a little bit of a relief rally, getting over the hump there from those NVIDIA earnings. Check in on Affirm, 27% to the upside now. Salesforce up 1.5% after they trade lower on the open. Look at that one, man. You talk about a give back, and then CrowdStrike on the flip side, it's not stopping, up 7%. Folks, thanks so much for tuning in. Stay tuned. Basil Chapman, he's ready. He's coming up now. Live programming after that. Have a great